compromises, won't we? But let's get the market view now on all of the. Nadia El-Bilassi, senior analyst over at Equity Group. Really good to have you with me in the studio.
Likewise.
There's so much to think about, but what really struck me from your notes was that you're arguing US investors aren't pulling out of domestic equities to buy Europe. Those flows to Europe are because foreigners just aren't interested in the US as much anymore. They're saying no thank you. How much would the dollar have to weaken to get foreigners interested in buying America again?
I mean, so far it's just not being looked at as a safe haven asset, and that's why people are rotating into gold. But U.S. equities are still going and showing resilience unless there are going to be shocks into trade deals that we're going to see. I think that equities are just more fragile into seeing the shocks in terms of trade deals. As we saw today, any kind of decisions about trade deals, like, for example, Japan, directly the Nikkei, it went down.
Yeah, and we had that shock when Trump pulled the Canada talks off the table and then he put them back on again. But really, when we look at what these deals are going to be by July 9th, if we get them, they're really just MOUs. How much upside does that really create for US stocks?
I think that there was some sort of relief after we saw that there was a pause for the tariffs, and I think this has been putting a lot of, like, the rally has already started because of the cuts and the fact that there was a pause into the tariffs. But now that we have a deadline, I think we should start to worry in Q4 when either negotiations go south or no deals have been made or any shock waves sent through the market in terms of any, like, higher inflation, obviously, or not many cuts as expected.
Just going back to the Fed, we get, of course, that US jobs report on Thursday. Maybe we could get non-farm payrolls surprising to the downside. If that's a significant surprise, does it put a July Fed cut on the table?
I think that according to the SME tool, we already seen an uptick into polls yesterday by 23%. Just 2 days ago, they were 19%. So I think that, yes, markets are already pricing in a July cut. However, Scott Bessent, earlier this morning, he has mentioned that we're likely to see a cut by September. But this will also be backed up by the NFP, which is highly important, but also the unemployment rate, which is expected to increase. I think this is going to give Powell a motive to cut rates as sooner as possible, because this is the goal, right, to have economic stability.
But if the Fed's cutting not because the trade risks to inflation have faded, but because the cracks in the labour market are showing, how much more momentum can that actually give US stocks?
I mean, both are giving enough momentum to U.S. stocks. I think the relief was necessary for U.S. equities to go higher, not just the cuts. I mean, that supported the rally last year in 2024, if we remember, just how many cuts we're going to have, and that's going to support economic growth. But also now we have spending bills that are going also out from Trump. That's also going to support equities, and that also supported equities last year. Is going to also have a mirrored effect this year as well. And also definitely the fact that we're going to see cuts is definitely going to just give a relief to US equities.
All right.
For sure.
The optimistic view. Nadia El-Bilassi, senior market analyst at Equity Group. It's lovely to have you with me around the desk.
Thank you.
Well, coming up on Horizons, the latest